One suitcase, one good shirt, and a pocket full of mail. I learned to read the weather by the bend in the corn. Then I traded that river road for a train in a dome. Taller buildings, harder rise, cold cash, cold skies. I held my breath, I held my ground. Then I heard that city sound. Boots in New York, heart still small town. I bet on my name and I never back down. From dirt roads to gold floors, I found my way. Boots in New York, I'm still that boy today. Ticker runs red, learn the game by the minute with a pad and a thread. From soybean fields to big deals, I can read a room. Every rise, every fall feels like thunder in June. Taller buildings, hard to rise, cold cash, cold skies. I held my breath, I held my ground, then I heard that city sound. Boots in New York, heart still small town. I bet on my name and I never back down. From dirt roads to gold floors, I found my way. Boots in New York, I'm still that boy today. Back home they still call me son, still say don't forget where the fields meet the sunset and the nights get wet. So I keep one foot in the past, one on the floor. Every win I bring back is for the folks I'm for. Boots in New York, heart still small town. I bet on my name and I never back down. From dirt roads to gold floors, I found my way. Boots in New York, I'm still that boy today. Yeah, I'm still that boy today. From the dirt road to the trade. Boots in New York. Hey.
All right. Good afternoon, guys. Welcome to the show. We're going to trade FOMC today. We're going to jump right into it because we've got about half an hour. And the first order of business is for us to get a couple of Apex accounts so we can new straddle them. I'm going to buy 2 trade of 8s, or should I just buy wealth charts? You know what? I think I'm going to buy all wealth charts. Let's go buy all wealth charts. We're going to buy wealth charts accounts right now. I think I have a couple in the back. So I'm going to buy like 4 wealth charts accounts on the thing. Hang on just one second. 004230. 004230. I'm gonna buy the 50s. Oh shit. 1333995. 133,995. All right. Logging into my Apex last day of the month where we can buy these. Let's buy the wealth charts, legacies. I'm going to buy the 50 legacies because they come up really, really fast. It should be about 5 minutes for us to make them. Okay, let's do this. The only problem is I hate doing it one at a time, but that's what we got to do. BK save. Okay, let's move this off screen so you guys don't see my credit card. All right, I'm going to buy 2 more, just telling you right now. I think that should be enough. I'm going to buy 3 all in right now. We can buy a little bit more later. Hang on. Coupon. Be sure to again. Be sure to use BK Save. Always use BK Save to get the discount. Use the BK Save code. Let's go buy some more. So this will be my second. Like I said, they're only 19 bucks. We're going to straddle the news, and we're going to leave some maybe for tomorrow too for the GDP number. Let's see how it goes. All right, and I'm going to do one more. Well charts, 50K legacies. This is off screen, so you guys don't see it. Again, BK Save code. Okay. All right. Hopefully they'll make it for us really, really fast because we're gonna straddle them back and forth. Okay, you guys don't see my credit card. 963. All right, cool. We bought all the accounts. Make sure you guys are ready. Do not wait for the last second because you gotta have the accounts ready. Let's go to Wealth Charts. Let's log in. And just going to log it to my right. So, I have my, what's really cool about this is you can just use the scalper platform. Wow, that's really cool. I didn't realize that. Okay, so these are my fundeds. What do we have here? This one has got 50. This one has plus 50. Those are pretty close to each other. So we have these two. This one is funded. What's this one? Oh, this is a 50,000 free. Oh, okay. So I bought 4. Okay, this is good. So this is perfect. We're going to straddle gold and we're going to straddle. No, actually, we can't. Can I straddle both at the same time? I think I could do that. Or it's. Will they care? I'm trying to figure out if they care. You know what we do? Let's do this. I don't want to go long Nasdaq, short Nasdaq because it's against Nasdaq. It's against Apex rules. They probably will let you get away with it. But let's stay honest with the prop rules. I was thinking of going long Nasdaq, short S&P, but instead let's do long Nasdaq. They raise rates, gold dumps. That is the single biggest neg, right? This is the biggest surprise. They just, if they raise rates, gold just flushes down the toilet. So, there we go. They created the accounts. So if we trade long NAS, short gold on a no interest rate hike, that should be positive. Now, the only other thing I'm trying to think of is, should I go long gold, short NAS? What's the better trade? Nasdaq is rallying in front of the news, which is kind of interesting. Really rallied 300 points in front of the news. Maybe on the assumption that they're not going to hike rates. Okay, you know what? Let's do this. Here's what we're going to do. We are going to oops, where's my thing? let's add another. How do I add another tab? Oh, duplicate chart. Okay, let me kill this for a second. Did we go duplicate chart? Where's the duplicate chart, guys? Oh, duplicate chart, sorry. Yeah, and I want to put that here. Okay, I'm going to move this over. And we're going to turn this into NQ. We turn this into NQ, NASDAQ. So we're going to trade the full contract on 375. The great thing about well charts is actually super easy to set this up, right? So we're going to trade this on NASDAQ with, it's going to be no stop loss, 156 ticks, apply. So take profit 156 on a 4 contract basis. So we can just go 4 like this. So I'm thinking we go long NASDAQ like 158. We're going to go long NASDAQ. Now gold is an interesting trade. We need 3,000 on gold against $2,500 drawdown. How many contracts do I need on gold? Each contract, $1 of gold, 700. Let's imagine 750. So $7.50, right? That's what it did. We did $7.50 because 750 times 4 is 3,000. We need 76. That's it. We need 76 cents of gold to make $3,000. So gold is going to be 76. So instead of, we're going to switch. We're going to go long NASDAQ, short 4 golds, right? We're going to stay at 4. Just going to switch our take profits. And on this particular contract, we're going to go GC, right? What's the GC? Did I let you trade continuous? Is he going to let me trade continuous? I think so, right? He's going to let me trade continuous. Wow, we're all, look at gold. Gold is also around. Everybody's rallying here. So this is really interesting. And let me make sure I'm in the right account. So we're going to go 375 against 370, the next one. Yeah. I'm just torn between, do we want to go long gold as a bullish theme against short NASDAQ? That's a 7.5 pop. Gold has just popped up, what, 75? I think if they don't cut rates, if they keep rates steady, gold pop. All right, I'm gonna make an executive decision that we're gonna go long gold and short NAS. If we do a rate hike, I guess we should be betting on the rate hike, right? I mean, the surprise rate hike. And if we get a rate hike, I think probably you're right. I think we got to do. Yeah, I think the surprise is a rate hike just destroys gold. So we're going to go short gold at 75 ticks, long NASDAQ 156 ticks, no stops in either one of them, and let it fly, and then we just see how it plays out. I think that's the game plan, and then after that we trade for real. 145 left, about 155 we can get ourselves organized. So right now my brackets are set to, it should be 156. My second bracket 156, and then I'm going to erase that, type in 76 for gold. I'm going to go short gold, long NASDAQ, basically playing the idea the surprise idea, because the only reason to trade this is it surprises us. I think if there's no interest rate hike, this probably is a dud of a trade, but still worth a shot. To give ourselves a play. Really don't think they're going to hike it. I mean, I'm completely. I'd be shocked. Shocked if we this. Well, Forex mass counters. Why do you want me to sell gold? He's convinced that there's going to be a rate hike. Well, we're gonna ride your guess. We're gonna go with the Forex mass counters guess. So the idea is this, guys. Look, we are trading Apex's kind of a one and done strategy, which is if we're right, this thing is going to moon or crater in 1 minute and fulfill one of our targets, which is what we want. We want one of these accounts to kind of fulfill and get done. So if that happens, we're in good shape. Okay. After my life. Okay. If that happens, then we absolutely get it. I think the probability of that is minuscule. It's 30% according to the market. I'm actually like, hey, I wonder what it is on Poly Market. You guys want to see what the Poly Market rates are? I'm just curious. Poly Market. Financial markets. I wanted to go financial market. Oh yeah, 25 Fed decision in July. No change. 77.23. Odds are coming down. So nobody thinks it's gonna be right. Yeah. So that's the Poly Market rise. Okay, Poly Market is at 23 odds. I saw 30% of it. So it's really a low probability event. So we're kind of just having fun with this thing. All right, Forrest insists. I'm going with you, my friend. Forex Masick is insisting that there's a rate hike. I mean, if he's right, we're definitely in the money. So we're going to go. So the game plan here is short gold, long NAS. May the best man win. No stops. This is do or die, baby. We live or breathe on this thing. Where's my? Hang on a second. Where is? Oh, no, this one I need to do. Why is this all tied in? I don't want this to be tied in. No, fuck this. Oh, shit. I don't want to tie this. I don't want to do symbol link. Unlink. How do I do unlink? Oh, fuck. I hate this stuff. Time frame linking, symbol linking. None. There we go. Okay. So let me duplicate this. Duplicate chart right over here. Okay, so what is this? So this one will be N. Well, this one will do NQ. NQ 1. All right, cool. So this is NAS 4 on both sides. The size is 4 on the large contracts. 156, and then we're going to erase that and go to 76 and trade gold. And gold is going to be short, NAS is going to be long. So we're buyers against sellers. 10 minutes to go. We will trade this about 59. 1 minute to blast off. Here's the clock on wealth charts is right over here, right? So we will 159. We're going to put ourselves in position and then have fun and see how it trades. No, there's no stop loss because this is like either one and done. We either burn the account because these are cheap accounts. Remember, this is the whole point of what we're doing is we either get funded or the accounts gets burnt because these are all cheap eval accounts. We're not trading this with our real funded accounts. That's a stupid thing to do. This is just to get them funded quickly so that we, with stuff we love to do all day long. We're gonna repeat the same thing tomorrow in GDP. I think. I don't think. I mean, I will definitely hang with you and try to trade Microsoft and Meta, but I don't think I want to front it because I hate trading earnings. It's incredibly difficult to time. It's always just basically a net loser to try to trade earnings. But I'll hang with you into the earnings close after because today we have a very busy day. We have FOMC, we have Mr. Softy and Meta on the close. We'll shift our attention to that at the end of the session. See how that goes. And we have the FOMC meeting, which comes in at 2:30. So we'll see. Should be interesting. But for now, the cool trade is this. We got about 7 minutes. I just wanted to show you. I marked up the chart, the scalp chart. This is what we were doing this morning, right? Using our regime tape, our tape regime, right? The tape was all bullish. If you had just traded my 5-point scalps, literally this was insane. This rally move here. It was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 against 1. It was 12 wins against 1 loss on scalp structure that we did this morning. I scalped after I left you guys a little bit off screen. It'll continue to do well. We'll go back to scalping if you guys want once Ward starts talking. But this is what I'm talking about. You need just an hour or two of this kind of 40 minutes of continuous trend action. And if you're trading continuous trend action with our scalp mechanisms, it's just money in the bank. It's just really, really, really cool. I just marked it all up just to kind of show you. I just could not believe how many positive signals there were in that, this hour, which I of course did not trade because whatever, I was making lunch. But that's all you need. Remember, there's probably 2 or 3 time slices like this during the day where you could just go to town and make 5, 6, 7 trades. This is exactly what we did at the beginning of London today, but we just collected $500 in 30 minutes, and then we spend the rest of the time dicking around. But that's what you need. You don't need, scalping is kind of like everything else. You waste a lot of time, and then you just have this one great hour, and you make all your money. And that's what it's all about. Just wanted to show it to you. I'll discuss this in much more detail. There's probably a lot of new people in the room today. There's probably a lot of new people are trading with us for the first time. You've never seen what the hell we do. I'll explain it all after the straddle, after the news straddle, because time is limited. We've got 5 minutes to go before trade. I'm going to lay down the trade and play it. Okay, very nice. Yeah, 5 minutes left. Ready to play. Nice to have everybody in the room. And we'll see what happens with the presser. I think there might be like a lot more play in the presser. We'll see. Anybody trade the this up move, this massive up move that we had? Yes, give me a +1 in the room. All right, 4 minutes to go. 159. It's usually the press releaser is 201 sometimes. So we kind of so we're going to be left hanging a little bit. Again, gold down, Nasdaq up, 156. This is a $50,000 account, so judge accordingly. 156 ticks target, 0 stop. 76 tick target, 0 stop. We're looking for $7.50 in gold, about $37 point move in NAS. NAS is long, gold is short, on a very, very outside chance that they actually surprise the market and hike. because gold is obviously going to be the most sensitive to a massive surprise like that. All right. And this keeps us very much on the kosher side of the ledger, because we're trading two completely separate instruments. So all with it. I'm sure we could go long NAS, short NAS on the evals, and the Apex isn't going to care that much. But that's not that's not their rules. They'll let you slide, but it's not their rules. So let's stay totally honest to their rules of where we want to be. We're trying a hedge position here. All right, 57. 2 more minutes. I'm not gonna rush the entries because I just really want to be super patient. I want to be there almost at the last minute, because I don't want pre-market vol to have a lot of impact on what I want to do. So 57, 58, at around 159. Neil, you had a good. You traded that. Did you trade that rally on using the lightning bolt trades and triangle trades? Did that help you? All right, NAS, long NAS, short gold. 158, 1 more minute left. Trying to be patient. Fortunately, thank God, the price action kind of slowed down, so it really doesn't matter much. But let's give it a shot. So you can see my stop loss 0, 156 on take profit, cancel here. I'm going to be a buyer at 159. I'm going to be long NAS. And I'm going to switch over. I guess this is the 375. So I'm going to switch over accounts. And you know what? I'm just going to buy it now. It's okay. It's relatively quiet, right? So 39 points up. This is where I'm at. No stops here. Now we'll switch over to gold. Switch my other account, 380. Go over here to simple, make it 76. Apply and sell my gold. So that's my gold. It's 7.5 down on the gold. So now we can watch the whole thing move up and down with all the fun. I think I can actually watch this in my broker portfolio. Yeah, here's my broker portfolio. You can have the fun here. This is this gold? I can't tell which one this is. Oh, wow. No. Oh, wow. Something is moving big. What's moving big? How is this moving big? Which account is this? The 75 account? Is NASDAQ really popping? Oops, sorry. NAS is popping. Wow, NAS is popping in front of the news. Holy shit. It's almost a target. Come, baby, come. Oh, did we get done? We got done. NASDAQ got done. So we look at this. NAS got done. No interest rate hike. Beautiful. We ran right in front of it. They ran the move. So NAS got done. Gold got burnt, which is perfectly fine. So NAS is 53. What's the gold one? Gold is burnt. So gold is totally burnt. Cool. Gold. I bet gold must have mooned. Where's gold? Gold is mooning. Look at it. Gold is just like, gold would have been the easiest trade in the world to the upside. Holy cow. Look at that moon. Look at that moon on gold. 95. Holy fuck. 40 points. That is super easy money. Well, I'm sorry to say, who was it? Who was screaming for a rate hike? Forex Massic. I'm sorry to say you were wrong, my friend, but fortunately the strategy was right. And we managed to fund the account. but yeah, I mean, this is wild. Anybody trade with me? Anybody got funded? So nice. This is another one. Another one goes into the trade column. That means we're going to have like, let me see. This is funded. So 1, 2 PAs, 3 PAs, 4 PAs on this one, and we got 6 on the other one. Perfect. So we got about 10 funded accounts now, and maybe we'll have a couple more tomorrow. Maybe we'll do GDP tomorrow. Who traded with me? Hound Dog, there it goes, and Q. Okay, Christopher got an ass. Plus gold now is in minus when we short, but I went. Okay. All right. All right. Very cool. Very cool, guys. Very nice. All right. So that got funded, which is fun. We're probably going to be kind of dead. Let's see. I don't even know what, let's look at the news. Holy shit. Let's see what, well, actually, let's see what Financial Juice tells us the headlines. Okay. Fed's vote in favor of policy 9-3 with Hammack and Kasawi dissenting in favor of really Kashkari. Kashkari was like the biggest dove. Now that Trump is in power, he's a inflation remains elevated relative to percent of goal, collecting supply shocks in certain sectors, including energy, U.S. interest rate decision action, blah, blah, blah. They'll be expanding at a solid pace. Federal Reserve leaves key overnight rate unchanged. Productivity growth and capital investment is strong. Maintaining ample reserves in the banking system. Job gains have kept pace with workforce. Unemployment rate has changed little. Okay. Nothing much. Okay, so a pretty dovish statement from the Fed, which is what ramped everything up. And by the way, look at how the market was sniffing a dovish move. I mean, this was a massive rally from 12 noon, right? Look at the move on the trade. Really, really crazy. Anyways, let's just set the table. Where we're at, what we're doing. I says you funded 2 ES accounts, blue 3 NQ accounts. You went short NQ. All right. Either way, it worked, right? Two is nice. A good idea. I mean, we could have probably funded more, but I like to do just 1 and 1. Okay, so the rip and the rally beforehand. We do have positive tape right now, and it's tempting for me. What account is this? What account am I in? Fuck, where am I in? 79. All right, let's trade 79. This is a good account to trade. Am I in 79? I want to go 79. Hold on. How much time do I have? 25 seconds. I'm going to be a buyer here on the close of this candle. I'm going to be a buyer, even though this is a sell signal, because the tape is positive. So I'm going to try and bet on the fact that what time is it? 51. It's bopping. 54. Let me see if I can. Okay.
Order filled.
I'm in the trade, and we're done. Beautifully. Beautiful, beautiful, beautiful. That's a super quick scalp, as you can see. Bought here, sold here on just a 5-point scalp. So why did I do this? Those of you guys who are with me in New York know exactly why I did this. So we have short-term scalp signals, and then we have the general broad market contextual signals, and then we have the market regime signal. Now, this is something I have not released yet. This is an overlay indicator, which I just basically created yesterday. That's been very, very helpful in creating context of when, sometimes a buy is a buy, sometimes a buy is a sell. When is a buy a buy, when is a buy a sell is determined very much by this thing, by the regime indicator. What this indicator does is it tells us what is the underlying market regime. Is it bullish? Is it bearish? Is it mixed? Right now, the tape is clearly bullish. It's telling you the tape is bullish. If the tape is bullish, then every sell scalp signal is a buy, and every buy scalp signal, like right over here, is a buy. So everything becomes a buy. The sell scalp signal is a value buy. I bought it over here, boom, pop. The buy scalp signal is a momentum buy, right? All because the regime is telling me that everything is hunky-dory on the overall thing. That's how we use the two indicators to tell us what we want to do. Now, if this thing turns gray when it's mixed, then we have no trades. Then this we stand down. We don't care what these signals show up as. If the tape is mixed, it's giving us contradictory signals. The whole idea is to be committed to one side at every possible opportunity when you have the confidence that that side is winning, right? That side is winning. And doing that obviously just creates lots and lots of positive opportunities for us on a scalp basis. Maybe. I don't know. I haven't had any problems with them on this. I think you can make a fair argument that the gold and Nasdaq are not correlated. They certainly are not correlated. They're not the same instrument. It's like saying gold and oil are correlated. They're completely different instruments. I think that's. I've never had a problem with them honoring the account in this particular strategy, and I'm sure you won't either. I'm saying, it's a soft rule for them. They're obviously not going to they're not going to pay you out money on doing that, but they're more than happy to let you get funded on that. So it's just a quick and easy way for us to get done, right? Save ourselves the week's worth of trouble. But anyways, on a more important level, like on a day-to-day grind it out, let's go for payout level. This is what we do. We scalp with the dominant regime. The regime now is obviously bull, so that's the dominant regime. We now have a sell condition, and the next triangle is going to give us a signal. Now that signal could be either positive, which would be a cyan signal like this, or negative, magenta. Either case, that's going to be a buy signal for us in this particular regime, right? A sell is a buy is a buy. That's what we've been doing. And it's really, kind of works really, really well. Now, if you want to be super, super cautious and not be so aggressive, then you only wait for buy signals. So you want to, so like, for example, right now, this is a sell signal in a bullish condition. You don't do anything. You just pass it up. You don't trade it. You give it up. You wait until you have a confirm of a buy signal, and then you trade that. Yeah. Price did not saw. That was really, really nice. The positive regime. The positive regime is based on two interesting inputs that kind of Claude and I worked out. I mean, I really can't. That basically Claude worked out. The first input into the regime is a 20 SMA slope, 10 look. Here's interesting. I mean, I'll tell you what the research showed. It's kind of really, really fascinating. So don't look for trend in the most immediate 10 candles prior, right? What happens in the most immediate 10 candles prior is a huge amount of noise and mean reversion signals. Like there's very, very little value in extracting what the broad general trend is 10 candles prior, because the most recent data, most noisy, is lots of going up and down relative to the prior data. The sweet spot of the 1 minute chart was the 20 to 50 period SMA. Between 20 and 50 look back period gave you the best prognosis of what the future lies. So that's why we have a 20 period SMA, and then we have a 10 bar offset chart. So the slope is what is a 10 period SMA against a 10 period discount? What was it? This is a 20 period SMA. You go back 10 periods. Is it higher or lower? If it's higher, it's a bullish indicator. It's lower, it's better. And this is, by the way, the offset. The offset, of course, is massive. It's 80 points higher because of the spike. That's going to come down. So that's input number one. Input number two is actually completely non-derivative. That's what makes it so good. Input number two is just simply counts last 31 periods, up bars to down bars. What's the ratio? The ratio here is just mildly, actually very, very mildly positive breadth, right? So when those two align, that's a bullish thing. If one of them does not align, that's a mixed tape. If the both of them turn negative, then it's a bearish tape. And that alone is what feeds our assessment of the regime, right? By the way, this would have worked too. See this, you would have been long here, boom, 5 point scalp would have worked. And the triangles and the lightning bolts is what trigger our trades. So we have the scalp trades and the regime, and we trade both against each other, and that's what creates the high probability setups. So hopefully does that make sense to everybody? Oh man, I'm losing I've been on air for like 6 hours already today, so I'm totally losing my voice. I'm going to try, sorry, I'm going to try something interesting. I'm going to try and see if you guys can actually, how can you get dots lifetime activated on well charts? Are you email me if you got the lifetime package, just email me and I will activate you. No, we don't trade Forex. I don't trade Forex. I mean, Kathy trades Forex. I haven't traded Forex in 5 years. Email me at our, if you're a lifetime member, you should know, contact at bktraders.com. I'm putting the email in there. Anybody who wants to download, there's probably a whole bunch of people. You want to know sort of all the ins and outs of this particular indicator, dots. Just go BK Trader Tools. BK Trader Tools is this domain that I took down specifically for all sorts of tools that I make for you guys. BK Trader Tools /dots. I just put the link in there. Just fill this in, press the thing, and it will give you the download. It will just download the PDF. It will give you the PDF for the thing, right? That's number one. Number two, I'm running more giveaways. You know what? As a matter of fact, let me see. Guys, let's do one pre-FOMC. We're going to do, I have like three Apex accounts to give away. So let's do one pre-FOMC. Everybody enter BK Trader Tools /giveaway. Let's do more, let's give away more Apex accounts here. So you guys can go out there and straddle them tomorrow. Let's do that right now. Let me see if you guys have signed up. I'm actually keeping everybody who registered earlier today did not win. You guys get to stay. You guys get to stay. I'm not resetting the thing. I'm giving you just the opportunity. But go out there and register if you haven't registered into the entries, because this will give you a lot more opportunity. I think we're going to do the wheel, and we'll do that 225. That'll be the first giveaway will be 225. Okay. So whoever's listening to me right now, if you're on X, I'm just going to put the giveaway again. I'm going to say I'm going to put this on X right now. In the background here, 50K Apex free giveaway. Okay. Now, all right, here's the link. So go crazy. People are starting to register. Good job. Okay, let's do that. Let's register. Okay. Still bullish tone, but of course we're going to wait to see what Warsh has to say. Oh, look at this. Zero Hedge says Fed swaps no longer fully priced in the September 8th. This was a dovish reading, because I think people thought it was going to be like 8.4. I mean 9.3 is pretty dovish. No rate change sparks 3 dissents as Warsh Fed delivers because non-cut surprise in decades. Cautious traders see 70% Fed rate holds rate today in 23. Yeah, that's already old news. So the swaps really kind of get off the swaps were pricing at a full rate hike in September. Now they backed off that. And it may stay stationary. A lot is going to, I think August, so usually August is kind of like a boring month, right? Everybody goes on vacation, markets kind of stay stationary. I have a feeling this, I remember, I'm old enough to remember the Russian, the LTCM meltdown in August, when the Russian bonds defaulted and LTCM nearly went bankrupt and took the world with them. And that was like an insane August. I have a feeling we might have an insane August, because if they imagine we go hard into the strait, like 82nd Airborne, is given orders to take out Carter Island and grab the oil. That is going to just create so much vol into the market, right? And August becomes suddenly, from a vacation, instead of a vacation month, a really, really crazy month. The reason why I'm thinking of this is because Trump has got a gun against his head. He's got elections coming up. He cannot let this thing just fester unresolved. He's got to get this done. So I don't know. It's going to be, I think it's going to be an interesting month, because it's really the whole trade in the market now is AI versus Iran. That's really what it's all about. The whole market is just AI versus Iran, with Korea sprinkled in as the volatility subplot. That's the whole story in the markets. Anyways, all right, we're almost 5 more minutes to the giveaway. Let me see where you guys are at. You guys register? Oh, nice, you registering. Very, very good. Very good. Come register for the giveaway. Wait, hold on a second. Are you serious? This is a crazy story. Wow, look at this, guys. This is a crazy story. I can't believe there's an ARB here. So this guy says that okay, yes. So they hedged 600,000 K on the Fed hiking rates, 25 bips via Kalshi. So the Fed funds futures were, they lost money, but they lost less money than if they fetched. Wow, that's so interesting. So if that's possible, just think about that. That makes no sense. If that's possible, then you could go short Fed funds futures, long Kalshi. You could be a buyer and pay all the spreads. If this is a 25 bip, how much was the spread? If it was 25% cheaper, it way overcomes the spread. You could have just basically been long one, done what we did, long one, short the other, made money. That doesn't sound like it's going to stay in place for much. I can't believe that that's not arbitraged. That sounds crazy that was still in place. But it's really interesting that people are starting to use Kalshi as a hedge platform. Well, what I mean about Korea sprinkled in is that Korea obviously it matters in the world economy, but it's not going to bring the world economy down all by itself, right? Samsung and Xilinx are important, and the fact that they just burnt a massive hole in in their balance sheet is not great, but they'll survive. They will survive. I mean, the Bank of Korea could print a fuck ton of money to kind of paper over the losses that people have had there. I mean, obviously, it's a hurt, but I don't think they're going to be taking down the world financial system with it. So that's why I'm saying it's a sprinkle. Oh, really? No kidding. By the way, not a bad. Did you guys notice? Look at this. Jersey Mike's IPOs tomorrow. Not bad. Although I got to tell you, okay, I'm going to tell you the single greatest Jersey secret, in my opinion, of like the greatest Italian sub ever for the least amount of money. You guys want to hear it? This is my after 5 years of being a temporary resident of Jersey. This is my one big discovery. Oh shit! Was it 225? No, it's okay. We're fine. We're not going to trade until he speaks for about 5-10 minutes. You guys ready? You guys ready to do the giveaway first? Should we do the giveaway first and then I'll yap? Let's do the giveaway. Refresh. Okay. So let's do draw. Okay. Here we go. We're going to be obviously drawing for our friends at Apex. We're going to do the wheel. I'm going to do the wheel, okay? And we're going to spin the wheel. Laura! I wonder if she's in the room. Even if she's not in the room, I'm going to give it to her because she's a BK OG. You got to be in the room to kind of win, but she's probably busy. Maybe she's working, so I will let her know. So Laura wins. Good job for Laura. If you guys want any of the discounts, of course, Prop Trader Edge, our sister website, just QR this code. This literally will save you the most money on any prop firm around. Every prop firm that matters gives us the biggest discount possible on this website. So come join us. I have a whole bunch of free tools on that website. I have a whole bunch of stuff for traders that I make on that website. Have a good time with it. But I will let Laura know. So Laura wins. Very nice. A free Apex prop account, 50,000. So she wins a free $50,000 account, so she can go hog wild tomorrow and trade. Don't worry, keep entering your name because I got 2 more giveaways. I got two more Apex accounts to give away. So we will do another drawing after Kevin wraps up around 3:30, and then we'll do another one after Mr. Softy and Meta report. Okay, so we will do lots and lots of accounts. Okay, cool. All right, so let me try something interesting. Let's see if we can do this. It's 2:24. It's still early. I was gonna try and see. You know what? Let's test this. Let's test this out. Let's see if I'm right. Here's what I want to do. I'm gonna be able to do this. No, you know what? I'm not gonna do it because it's too much of a big pain in the ass. I have to change from StreamYard. No, we're not gonna. I was gonna see if we could broadcast directly into the Fed. Doesn't matter. We're gonna just Fed presser. He's not gonna say anything interesting, anyways. And whatever he says, let me see if I can. I'm going to do something. I'm going to go off screen for a second, guys, and come back on and see if you guys can hear it. And we'll see if it works. Okay, just bear with me a sec here, guys. Hopefully, I'm not going to screw things up. Just bear with me a sec. All right, sorry. Can you guys hear me? Can you guys hear me? I could not get this done. I can't do it. Can you give me a sound check, please? Let me know if you guys hear me, please. Testing 1, 2, 3. Do you guys hear me, please? It's okay. Give me a +1 if you guys hear me. Okay. Okay. All right. Were you guys able to hear the video or no? Like if I played a video right now, let me see if you guys hear. Let me see if you guys hear this. Do you guys hear this video or no? There's like music going on. Do you hear the music in the background or no? You actually hear the music? Really? Say yes to music. Wow. All right. Maybe you guys can. We can actually. I didn't know this. Maybe we could actually. Wow. Maybe we can actually listen to this. All right. This is like incredibly boring. When he comes on in about what? Which time is it? 2 minutes. When he comes on, I'll flip this on, and I just muted it because this music is enough to kill me. But when he comes on, we will. I'll see if you guys can hear him. That'll be super interesting. And then we can mute on and off and come back. Wow, I did not know that we could do this. That would be awesome because that means future FOMC pressers we can do this together. So you literally could hear that annoying ass Fed presser music. Just give me a yes, and then when he comes on, we could listen to what he says, which would be really cool. What time is it now? Almost time. 29. Let's see how the price action goes. So we unwound the. Now, by the way, we're tape negative, right? Tape negative, which is kind of interesting. So tape bearish. So that should be interesting to see. Now every sell is a sell and every buy is a sell, right? When tape is bearish, every sell is a sell, every buy is a sell. Kind of interesting. All right, let's see if Warsh is there. There he is. Okay, let's see. They're gonna open up the feed in just a second. I don't hear anything right now. Now I hear the audio. Wow, I did not know that was the flag of the Federal Reserve. I didn't know they had their own flag. There's Kevin Warsh. Just tell me yes if you hear him, okay? I just want to make sure.
My second FOMC committee meeting as chairman has come quickly. It's probably too early to call it a streak, but our discussions again were collegial and constructive.
Okay.
I'm truly lucky to work with colleagues. So
He's a robot.
mission
Like,
focused,
I don't really understand this guy.
determined, like I am, to sharpen the performance of the Federal Reserve. Today, as you know, our committee decided to vote by a 9-3 vote to maintain the target range for the federal funds rate at 3.5% to 3.75%. The committee is continuing its policy of making ample reserves in the banking system.
I'm at 100%,
The
guys.
economy is showing impressive resilience, even with recent shocks.
The economy is showing impressive resilience.
And reveals solid growth. Job gains have kept pace with the workforce, and the unemployment rate has changed little.
No big problems with unemployment rate.
To the committee's 2% goal. The committee remains resolute. You've heard this before, but we will deliver price stability. As before, the policy statement conveys just the facts. It's steering clear of forecasting, a choice we consider especially prudent at these uncertain times.
Market's selling off a little bit in the background.
Does not mean a lack of clarity. For some households, businesses, and market professionals, 5 years of high inflation have left a mistaken impression that's hard to shake, that the Fed's implicit inflation target was somehow above 2%. Let me reiterate, there is no soft inflation target. There is no soft implicit target, not on this committee's watch. There's only a target, and it's 2%. Not one of my FOMC colleagues is under any illusion. We have begun a new chapter, and we understand that the 5+ years of inflation above target cannot be cured in 9 weeks, or by a single month of modest price decreases. This Fed will not waver. Our credibility rests on performing our duties and delivering on our responsibilities.
All right.
Americans are right to expect that.
Can you guys hear him still?
Prosperity depends on it. To the regulars here in the press room, today's assessment might sound familiar, yet there was nothing inertial about our discussions, our policy, or our strategy.
Oops.
Two
Sorry.
economic developments worth highlighting. The first is a very notable change since our last meeting 42 days ago. Nominal and real yields are materially higher across the Treasury curve.
Nominal and real yields are higher.
Some of the increases in market interest rates between FOMC meetings are among the most significant in the last 2 decades, ranking around the top decile or so.
It's a big jump in rates.
But if the committee didn't change its policy rate, what happened? In the intermeeting period, market attention centered on real data and real economic developments. Prices reacted in real time to incoming information.
Sorry, guys. Hang on a second.
Reduction in forward guidance may have been a factor. Market participants are learning to play the ball, not the referee. And market prices will continue to respond
See ya.
in the direction and
Shut
magnitude.
up.
This is, in my view, a change for the better. And we're just getting started. After all, the central bank need not always and everywhere be the center of attention. I understand the desire for rolling forecasts and commentary from this committee. But for our part, we need to observe market reaction to developments, direct and unfiltered. I want to stress, of course, that decisions by this committee matter a great deal. And where necessary and appropriate, we will not hesitate to act. A second economic development is one that I noted at the congressional oversight hearings this month, but it's worth repeating. The most striking feature of the economy is the strong growth of business investment.
Business investment
Emerging high-tech CapEx has been
and CapEx are very positive in the economy.
Make the Fed's role any easier. In the AI-related category of high-tech equipment and software, the most recent data shows 4-quarter growth rates of nearly 20%. This is helping to sustain the healthy momentum of manufacturing output. More generally, CapEx is preparing the ground for future growth. Nonetheless, the precise timing and magnitude of effects on the supply side remain hard to predict. FOMC meetings produce policy decisions, but just as important is candid discussion of the big things that matter most. That too is a priority in this new chapter at the Fed. In our meeting, vigorous discussion centered on 4 questions, which I will enumerate. First, we talked a lot about the implications of the past 5 years of high inflation on the current policy conjuncture. To echo an old phrase, has the past really passed? Second, my colleagues and I considered the economic shocks of recent years, strained supply chains arising from the pandemic, military conflicts, energy supply disruptions, substantial increases in tariff rates, and yes, the surge in AI-related investment. These differ in their sources. Do they also differ in their effects on output and employment? Third, we took up the related question of price increases arising from shocks. The business CapEx boom, for example, is driving up prices of memory and logic chips and associated AI infrastructure. Do these changes indicate a broader inflationary dynamic, or do we just focus on them because they are under the bright streetlight? Finally, we discuss monetary policy tools and strategies for achieving stable prices. If, as the Fed has long held, interest rate policy should be its primary monetary policy instrument, how much accommodation are we getting from the balance sheet? In all of this, our work is advancing at the Fed. We're asking the right questions. And in this consequential time, we know how very much depends on getting the right answers. Of course, you've all arrived with questions of your own, so let's turn to them now.
Okay, so let me just mute this for a second. It sounds like they are thinking, is this inflation temporary? Is the CapEx impact of this, Steve? What Steve has to say.
In the absence of forward guidance, I'm wondering if you could tell me what message are you getting from markets as to where policy ought to be right now?
So I think officially it's 8 weeks and 4 days, but I'm not counting. The message from markets is the message from markets. What I've really been trying to do, Steve, as I think you appreciate, your colleagues appreciate, is getting an unfiltered message from markets, getting a direct message. Letting buyers and sellers meet at prices for treasuries, for the foreign exchange value of the dollar, and then trying to judge for ourselves, what does that mean about our remit? How are we doing on inflation? How are we doing on employment? We're trying not to interfere with that market signal. It's part of the reason why we've been somewhat spare in our words when we pulled back from forward guidance. So they're reacting to events, I would say, much more directly over the 42 days since we last met. This is a good thing. As I mentioned in the prepared remarks, we've seen a material tightening, not just in nominal rates, but in real rates too. And we're observing it.
So this is interesting. Basically, it's kind of like he's basically saying the market is doing the Fed's job for it. He's saying the market is already tightened. Nominal and real rates really spiked. We don't necessarily need to guide the market because the market is reacting properly by itself by tightening capital in response to these inflationary pressures. Let's see what Steve has to say.
So, I'm sorry, it's your question. So, interpreting markets is an imperfect business. We central banker market pros can think these things are overdetermined, but let me offer some speculation. First, as we said in the FOMC statement that you got at 2 o'clock, the economy output is solid. CapEx and productivity are strong.
Looks like we want to take out. Looks like we're running for the high, Steve.
The bond market, the treasury market,
market is mixed right now. The regime change is mixed. If this starts getting green, we might want to start thinking about getting long here.
But the bond market's saying many of those same things, and that's why we're seeing a tightening both in nominals and in reals. Even while at some level we haven't done much in 42 days, the markets have done quite a bit.
Again, market doing the work for it, which means that the Fed doesn't necessarily have to step in.
You seem to have got the fight you're after this meeting. So we saw three dissents. Could you characterize the arguments that those dissenters put forward, please, and tell us a little bit why you weren't persuaded by them at this stage? Thank you.
So I guess I shouldn't give you their best arguments. I'll give you some. So you're right. I asked for a good family fight and I got one. That's the purpose. That's the design feature. I come into this meeting, even this press conference, heartened by what I've experienced the last 2 days. Most of our discussion were on the big questions that matter to the conduct of monetary policy. We didn't sort of hide from them. Everyone's scared of them. There was a lot more interaction between among my colleagues.
Tape is still mixed.
Family fight.
Still finding, a lot of
that's the better way to get policy.
a lot of resist in front of the New York high and the London high here right
There
now.
was a lot of agreement that I heard that we have the powers, the tools, also the authority to deliver stable prices. No walking back from our responsibilities. There was a large majority support for the decision that we made in the room. But I also want to leave you, Claire, with one other impression. There was nothing inertial about that discussion. It was an active, robust discussion about what's in the full range of what we can do and might want to do in the period ahead. You characterized accurately. There was a disagreement about a decision today.
You know what's interesting about his tone, which is very different, very, very different from the former Fed officials? Like, I just want to pause him because, whatever, he's going to be us for a little while. Like, what's interesting about his approach is, you notice what he said, what we can do and what we're able to do. Unlike the former Fed chairs that believed that the Fed was omnipotent and could essentially create policy at will, he seems to basically say it's really the market that leads interest rate policy. The Fed is not the dominant player here. It could be a supportive player, a corrective player, but not a dominant player. Whereas, when you talk about Jerome or Janet, when they were Fed chairs, they were like, we could do this, we could do this, we could, change policy. It's very interesting change of tone.
What I care about, and what I think the committee cares about, is trends on the data. I'm sure we got some encouraging inflation data. I think at the meeting 42 days ago, I said something like 63 months of inflation above target. I didn't say 64, though the final calculation might be a close one. So we'll be watching.
Tape just turned bullish.
Ahead.
So let's see what the next thing is. Are they going to run the New York highs? Let's see.
Breathlessly waiting. I've called for a task force to revisit both the private and public data we use to make our decision making.
I'll be right back, guys. The doggos are scratching at the door.
Checking back in within the next couple of weeks, but I wouldn't say we overly relied on any one piece of data, including that data, which surprised some a couple of weeks ago.
Hi, Jim Bush. Thanks, Neil Irwin, Axios. Thanks for taking the questions. So the Fed funds rate is now about 75 basis points below the two-year yield. Suggests markets think you'll have to tighten eventually, about 100 basis points below most Taylor rule estimates. You're hitting your employment mandate, inflation stays high. Why should rates not be higher today?
There's a lot in there. So rates are higher today than they were 42 days ago. Markets have made decisions because we step back in part from trying to influence those.
See,
Market judgments have moved up on what nominal rates are across the Treasury curve. That doesn't mean we take them as by dictation, but we're observing them. So I think it's a mischaracterization to say that markets haven't reacted because we didn't move today. Markets are reacting in real time. In the period ahead, we've got important decisions to make about the policy rate. Markets in the intervening period, I think, have quite a bit of decisions to make. I'll see if I can put it this way. Monetary policy matters not just by what we say or even what we do. Monetary policy matters by how it affects the real economy. And these prices that we see in financial markets is one of the many ways in which it affects the real economy. We'll be continuing to watch that market information, see how it responds to incoming events, and that can help inform our decision making when we meet in 7 or 8 weeks.
How would you characterize the family fight the last couple of days of you and the other 8 members who wanted to hold? Was that a strong conviction, or was that a hair trigger close call on holding versus tightening?
Well, I think the vote was 9-3. The broader discussion to my ear over the course of the last days showed a lot of agreement on the hard questions. 4 questions I raised at the outset.
So what he's basically saying is the majority of the Fed is in hold mode, right? Which is why you see the market rallying. You see NAS now testing the New York high, 2,800. We don't have a signal, but we now clearly, tape is totally bullish. If we get a signal, we're going to try and take a scalp here. But it's a slow, steady climb up. What stands in front of us is London high, and then in front of, above that, all the way above that is Tokyo high over here. But the recovery that you see as he's talking is him soothing the market into saying, hey, we're not in any way, shape, or form ready to hike rates in September if things stay like this. We're willing to act, but the market has already done the hard work for us. There's no reason for us to add salt to the wound. Oh, here we go. Big breakout to the upside. If this holds, we're going to go long this trade.
So that was the discussion in the last 2 days. Is that the dominant remedy if inflation continues to be elevated through the forecast period? Interest rates could well be part of that solution, but I wouldn't say it's in isolation. Tried to describe in my remarks today a point that I made into the oversight committees a couple of weeks ago. I think there was a misimpression by some in financial markets, by some households and businesses, that central bankers like me, we set a 2% inflation target, but maybe we were more tolerable of a somewhat higher inflation target. In economics, we'd call that the revealed preference. And so it might have been rational for people to think, well, their inflation target's somewhat higher. What I heard in the last 2 days, what I've heard in 8.5 weeks is, no, we will deliver the 2% inflation target. That is the committee's definition of price stability. So one way, absent the tools that you reference, to ensure that we get there is ensure that expectations are centered around the right number. And I think we made some progress on that. I am not suggesting we're done on that. It's worth reiterating. And ultimately, the business we're in, Colby, is performance. We are going to be judged by how we perform. And that's what we intend to do with the inflation target. Making clear expectations is one part of it.
This is the most hawkish he's been, where he's saying, no, we're not bullshitting about 2%. We really are sticking to it. The market doesn't seem to really care. It continues to grind higher. We're at 28.50, pretty much at the London high now. Still no signal for us, but obviously tape turned considerably bullish for us. We just don't have any signals.
Effectiveness of rate hikes in your view?
First, on the premise of your question, it was almost as if you were listening to our discussion the last day and a half. A lot of our focus was on trying to understand and identify underlying inflation dynamics amid shocks. We take these shocks seriously. There have been a series of them that have been hitting this economy. We're not looking through them and saying, oh, they don't matter. We're trying to understand as to what extent are these shocks broadening in their effects, broadening in their impact on prices that are quite far removed from it. Our goal is to have growth that is broadening and inflation that is becoming more limited, more circumscribed. I'll be the first to admit the shocks make this job in this policy conjuncture a little tougher, but that's among the chief questions we've asked ourselves. And around the room, people have different views on it.
So basically he's saying, look, higher oil prices, definitely higher chip prices, definitely making our job tougher, but not so much so that we want to kill the golden goose of the economy. Economy keeps growing. We don't want to strangle it with a rate hike just yet, because we don't think that the inflationary pressures are broad enough or wide enough to cause a big impulse. That's sort of like his point here, which is why, again, the market keeps climbing.
What we did as a rigorous review of the economic situation. I would characterize what we did as a review of the big hard questions, and I characterize it as a view of what our own homework is to try to resolve those questions in the period ahead. If you were to try to force a description that this was a pause, I would say financial market prices would take the other side of that. Financial market prices in this intermediate period, they didn't pause, they reacted to the inflation data in one direction, strong economic growth in the other direction, and nominal and real rates went up. Did the Fed take an explicit change in its policy rate today? No, but I think that's the beginning of the story, not the end of the story.
All right, finally got a signal. We're playing around with it. We got 49 seconds. Whether buy or sell, we're going to be buyers here on the close of this candle, because the tape is bullish. We are at literally New York highs, London highs, really, really key area here. So we could, we could be buying the top here, but we're going to try to follow our strategy the best we can here. 25 seconds left on the tape. See if I can scalp this out.
What was going to be happening in the fall? I haven't made any judgments on that, but those are judgments we'll have to come to. If I could, in the high mountain air in Jackson, Wyoming, I'd like to also frame the big questions. There is
Order filled.
All right, in the trade right now.
Proliferation of
See if I can get the move here.
They get caught up in,
And we're done. The scalp got done. We traded the dominant trade, and that took us higher. So that's good. First post FOMC scalp works our way, following our structure.
what's really happening with productivity,
And
what's really happening with demographics, what's really happening to the global economy amid the shocks.
oh, you know what I wanted to say? Okay, so he's sort of talking about the bigger picture. What's really, really happening with productivity, what's happening with shocks and everything else. So I was listening to, you guys know I'm absolutely AI obsessed, right? I was listening to a podcast. My friend Kevin Muir, he had a guy on who was sort of very, very interesting, a heterodox economist. He is also a former hedge fund manager. And he was saying something that I thought was absolutely spot on. What's the number one impact of AI, if you think about this? What is the number one impact? I'm actually curious what you guys think. Put it in the comments. If you were to say, what is the number one economic impact? Let's not talk about social and everything else, but what does AI do instantaneously? That it's inarguable that it does this. What would you say? Anything from financial analysis to medical analysis to design analysis to coding to everything else. What does it do? What is the number one? Increase productivity, right? Correct, productivity. But let's go even deeper. What it does is it is a mass. I mean, when you think about it, increased productivity means I can do more with less, or I can make something much less expensive than it used to be, right? Think about what AI does. It is a cost destroyer, right? 5-10 years ago, I used to pay thousands of dollars to have my ideas coded. I haven't, I have a level of coding now far more sophisticated than whatever I wanted to do at zero cost, or 1% cost of what I used to do, right? You doing financial modeling, 1% cost of what you used to pay somebody. The cost of intelligence, which was an incredibly expensive cost in the global economy, in the service economy, is going down to virtually zero. When the cost of intelligence goes down to zero, all costs go down substantially in a service economy. And that is the countervailing. Yes, oil may go up as an input cost. But, your ability to do your taxes for free essentially goes down. And those two things are services. Oil is a minor, all goods are minor inputs, especially as AI comes in, and we're going to be able to extract more oil for less effort with geology and everything else. So AI is super disinflationary, which is why he seems relatively complacent about some of these rises. It's disinflationary, right? Very much a disinflationary impact. So I thought it was kind of interesting because you don't think about this, but it does impact.
As we sit here today at this press conference, I think we've got a reasonable sense of what aggregate demand looks like in this economy. We're inferring aggregate supply. We're making a judgment about what supply activity is.
Sorry, just 1 second.
There's a race between supply and demand. And the surge in business capex.
Yeah, I'm in webinar. What's up, baby?
It's making that calculation a little harder to judge, but in the period ahead, we're going
Do you want to just text me?
What exactly was the disagreement today? Was it about the inflation forecast, or was it something more around the risks, with the tax?
Okay, all right, let me call you later then on that, okay?
So I'll let the dissenters speak for themselves. The way I've heard it over the last 2 days was overwhelming agreement on objectives, authority, and commitment. I didn't hear anybody walking away from it. The judgments as to how best.
So I have a sell scalp signal here, but I'm going to pass up on it because we're kind of pretty much at the New York highs. It might work as a long trade. It might still be worth to take a long trade, but I'm going to pass up on it just because I'm a little weary that this is a little toppy right here. We ran into New York highs, London highs over here. I think it's about as far as the market can go, but this is still a good signal. Like you could take this long and it probably would work. And it probably would have worked for the 52. Yeah, it would have totally worked for the 5. I pussied out, but still would have worked.
The treasury curve should be. And that, I think, has been a useful development. We don't endorse any particular market move, but I also suggest we observe them with keen.
Janelle Marte with Bloomberg. Following up on that, there was more uncertainty in the markets about what the Fed would do at this meeting. To some extent, you might think that's what you want to see. But my question is about, is there a point at which you would not want to surprise the markets if they were pricing in something with higher certainty that was opposite of what you were intending to do? What are the risks that you see associated with that?
Yes, so it's a good question. Surprise is not the objective function. Surprise is not what we're solving for. We have a clear star. What we're solving for is how to make the best decisions. Almost everything else should be in service to that goal. By not spoon-feeding markets, by not previewing our decisions, by not sort of giving nudges and wings, my colleagues and I have found in the intermeeting period, what we're getting is the views from a very accomplished economist. That's the internals of financial markets. Instead of just repeating or echoing what we're saying back to us, they're giving us somewhat, not perfect, their own judgment. Surprises are not the objective, but at the same time, I would say we didn't come into this meeting feeling constrained by the full range of alternatives we had in front of us.
So some of your peers have continued to discuss how they think about policy decisions, and if you offer your reaction function and your way of thinking about it, how concerned are you that you're ceding control of the narrative?
So I'm not very concerned. That's a short answer to the question. When some people that follow the Fed say, well, we don't want your forecast. We just want your reaction function. Part of me hears what we really want is your forecast. What we really want is your guide. In terms of reaction function, let me sort of disabuse people of a question that may or may not be real and be out there. Any central banker, especially a central banker where the labor markets are more or less in equilibrium. Any central banker, when he or she sees underlying inflation moving higher, he or she is more inclined to tighten policy. Again, when you've achieved the other side of your mandate and you see underlying inflation falling, he's more inclined to loosen policy. That's my reaction function, and I don't suspect it will cause people to not continue to pry for more, because the truth is, for a very long time, in a lot of countries, coming out of the 2008 crisis, we're in crisis mode. We were purposefully providing a lot of information, trying to provide a lot of assurance, trying to tell people exactly what we're going to do, offering forward guidance with clarity.
That's interesting. So basically he's saying, look, you know, the crisis mode way of doing business, the global financial crisis is past. We are sort of in regular real economy. And because we are at that stage, there's no need for us to constantly manage. By the way, buy. Let me see if I can buy this.
Order filled.
See if this is going to work.
Order filled.
Boom, done. Sorry, I'm yapping, but this was a nice clean. We broke the New York highs. Lightning bolt straight up. Obviously, tape has been bullish for the last hour, so this was a nice clean scalp to the upside. So really good. I mean, we are. Remember that the account. I took two accounts, 50,000 accounts. The first one was up $500. The second one was down $500 in London. We traded back to even, and now the second one is up $230. So for the day, we are up $700. Not bad. Trading one NQ contract the whole time, and really staying very, very tight to drawdowns. That is a pretty good damn day for FOMC, if I do say so myself. So good. The scalps are kind of working. The vol is absolutely crazy. I mean, I absolutely, did I get lucky? Absolutely. But, lucky with intention. I'm trading for very, very tight targets in a high vol environment. So the probability of getting those targets done is pretty strong. But if you're wrong, you're dead. I mean, you're wrong, you get stopped out. But because the stops are, we basically, what's interesting is, like, actually, let's see what my total win rate was 76% when I left you guys in New York. Let's see what now, because now I can basically just add up all of the numbers. Okay, so this account, 22 out of 28 in the 79 account, and what do we do in the 78 is probably still. There's only 5 out of 4. Yeah, 5 out of 4. So 4 wins, 5 trades. Let me do the. Okay, so 28 plus 5, that's 33. And it's 26. 26 out of 33. That's the total amount. 33 trades today, 26 wins divided by 33, 78.7%. And remember, I was saying we wanted to be 75 or better. We are. That's what picked us up. That the regime filter did pick up another, 30 basis points of spread for us, which is really, really good. Oh, let's see what Michael McGee has to say.
And help clarify this. You've said over and over again that your job is to bring down prices, to get prices stable, to hit your target, and that you will hit your target. The market says you're not there yet because they've raised rates. But all you've talked about today is talking about it. And it's not like members of the committee weren't there before you talking about it. So I guess what the American people might be asking is, what are you waiting for? So believe it or not, this press conference is not all I've done today. We have spent an inordinate amount of time in the last 2 days, 2 weeks, looking at our monetary policy strategy, evaluating our tools, thinking hard about the sources of data that we have at our disposal and we wish we had. We've also thought hard about the period ahead. What among these questions will be answered with more clarity, certainly not certainty. So the decision we've made today, the discussion we had in that room.
ATR shows up in volatility.
I can imagine. As a point estimate.
Oh, astrologer, I'm right up there with you.
Choice between
You and I match. No, Kathy's not my wife.
But I would tell you.
Everybody always makes that mistakes. No, Kathy and I are married to totally different people. Slope to ATR is just a vol. It doesn't have any impact. The two primary inputs is the breadth and the SMA. So it's still staying quite significantly bullish, right? If we get scalp signals here, the bias will still be bullish. But remember, when something is, this is pretty uber bullish. Like you were 100 points up on the slope. That's a big bullish move. It's like a ship. The bigger it is, the slower it's going to be to adjust. So if we have a big up move and then a total basically a V-shaped down, a V-shaped decline, this will not help you. It will not catch. You can see it quickly declining. I mean, we're 38, we're 100, we're 100 points up. Now we're 38. It's really compressing. But positive signals in a V-shaped decline are still going to clip you out. That's why you have to have a semblance of context. Honestly, here's the best way to interpret it, Yannick. The best way to interpret it. By the way, are you Russian? Is that a Russian? Is your name Evgeny, or is it just a totally different username? The best way to have a confluence is when the slope of the eddy SMA is in sync with the tape. So we have, positive slope. Like this was last trade where the slope was pretty positive. That was, confluence. Now the slope is negative. And even though the tape is positive, this is already, you can see with your eyes, not a great place to start buying scalps, right? This is right now liquidation time. At very minimum, you'd want the slope to kind of flatten out. But you certainly, this is not a place where I want to be buying falling knives, right? So it's, everything requires context, but it's pretty easy. Like this is a use case where you could very clearly see, this is not, even though the tape is bullish, not really a place where I want to be making a stand on the buy side, right? You wouldn't make a stand all the way over here when you had the signals, and the signals here were very clean and clear, right? You could have taken all these signals. Tape was pretty bullish, and over here, the tape was still pretty mixed. It took a while because the volatility was so large. It took a while to work this out. But if the tape was positive, you certainly could have taken this trade here too. So that's how you want to think about it. Where everything is in confluence, that's when you want to start taking those positive trades.
For better, more informed discussion inside the room. And I'm very confident that we're going to be able to do that. I am impressed by the credentials of these 15 people. And full disclosure, I've known almost all of them for a very long time. And I think they're going to give their best views on the subject. But ultimately, these are decisions we're going to make, and we're accountable to our oversight committees and to the remit Congress gave us to deliver.
Hi, Anne Sophia with Reuters. Nice to see you again. So I need a little help here too. You've said repeatedly you have no tolerance for inflation, and yet we are seeing above target inflation repeatedly for 5 years and through your term so far. And sure, you have no magic wand, but you have not taken action. You just gave us a little peek at your reaction function as well. You said that if underlying inflation rising, that you would tend to think that you might need to tighten. And with the exception of the most recent inflation print, that is what we've been seeing. So could you explain what you mean by no tolerance for inflation? And
no, she's really pressing him hard. She's like,
so, Anne, I hear from you what I hear more broadly from households and businesses. Impatience, delivering already. This is not an excuse. This is a fact. This FOMC, this board has been in business for 8.5 weeks. the patience, the impatience that households and businesses feel have been going on for 63 months. We are on the job. We will deliver. We are focused like a laser on making sure we can do it. But the suggestion that we're going to be able to do it with our magic wand is one I want to disabuse you and everyone else of. But the discussion the last 2 days gave me more confidence even than I had 8.5 weeks ago. The thing that we have at the FOMC, the support that we have from board staff, and the new hard questions we're asking, we need to resolve those. And as we resolve those questions, get smarter on those, we're going to deliver on the remit. You don't have to take my word for it. If you look broadly at market prices, they are certainly not saying all clear, but they are working in concert to keep us on our toes. And they have tightened financial conditions in this intra-meeting period. And that has given us, that has provided us some comfort that we've got the ability and capability to deliver.
So basically, he's saying, "Hey, the markets have tightened. I don't feel any rush to have to tighten myself."
Markets' ability to sort of make a judgment and then you to take signal from that judgment, how does that affect you when you come up on the September meeting and markets are seeing a near 100% chance of a rate hike as they see now? How does that feed into your decision making and your thinking?
So we're not going to be constrained by market prices. We're not going to be constrained or take verbatim from what the market's doing. But I think it's useful and to understand that markets can be very good.
Interesting right here. Remember we talked about the fact very, very negative slope. This is oh no, we just turned mixed. So that doesn't matter. Not even a trade. See, the tape finally caught up with the market sell-off. I was going to say, actually, you could have just faded this and bought this. You probably would have made a little bit of money. Remember, we talked about early in London that the most successful trades are usually the non-common sense one. So when you see a huge amount of selling like this, and it looks like there is no chance for a bounce, the bounce is probably the most reasonable trade. So here, if we've taken this long, even though it just turned to mixed, so you don't have the full support of the buy, it actually would have worked to the upside. But generally, what's happened is this whole down leg has worked off the bullish structure of the tape, and we're back to unwind. Kind of much ado about nothing. Markets are really not taking a lot of direction. I think in many ways the story is going to shift in the next 30-40 minutes to earnings and to where's the CapEx boom and is there future growth.
Let me just see if I can offer some clarity on that. Between now and year end, my predecessors and the Federal Reserve committed to press conferences this year. I'm committing to press conferences this year. That might be news to people in this room and of no particular interest to your viewers and your readers back at home. What I can offer as assurance is that the Fed's on the case, that this Fed chairman feels better about this board and this committee's ability to deliver than I did when I showed up here on the first day, and I showed up pretty confident. I've been heartened by the reception that I received. No doubt in some of your commentaries today, you'll talk about a divided Federal Reserve. But that's not the feeling I felt the last couple of days and the couple of days before it. What I felt was a group of professionals, all the different perspectives, different views, different judgments, but eager to roll up their sleeves and have a family fight, and eager to reform the way in which the Fed does policy, a keenness and open-mindedness and curiosity about that. So we have a far better chance to deliver on the remit that Congress gave us. And so I want to leave you with the optimism of a new central banker that we're committed as ever to deliver and to offer assurance we will. Thank you all very much.
Okay. That was, I'm just full of confidence after that little presser. He has handled it. I think he's handling the press pretty well. I will say this. Hang on. Let's get rid of this. Okay. All right. Back to business of trading. I will say this. He has handled the press pretty well at this juncture, in the sense that he just kind of took didn't take a lot of their bullshit. But the reaction of the market is basically, look, they didn't do anything bad. They may not actually hike rates. If oil prices recede, if we can get any kind, oil right now is what, $4.25 in JERS. If we go back to $4 a gallon in JERS, I'm just going to use JERS as a reference point. I know everybody's prices are different. If we are at or below rates in SEP, they may decide it's not worth it, to tighten. Because remember, they're playing this dual game. They don't want employment to start contracting. It's really important for them to keep employment steady, manufacturing steady. Interest rates are going to affect manufacturing a lot more than anything else, because it's a very capital-intensive business. Housing, all that stuff. So unless they're forced, they're not going to act, and that's where the market is acting. But then the market is sort of looking past all of this, is saying, okay, the interest rate threat has essentially disappeared for the near term. But now the story forward is where's the CapEx spend? Is Microsoft making money? Is Meta making? What the hell's going on? With the two Mag 7s. So we're gonna probably turn our attention to those guys in the next 45 minutes. In the meantime, we're probably going to be, we just made this was the interest rate move, which we, no interest rate move. We made money on this, just a pure vertical move. And by the way, here's an interesting thing that all of you guys who never traded with us, or maybe have traded before but don't quite understand, why is it that news events are such fertile ground for these one-and-done trades? A one-and-done trade is basically where you take one trade at reasonable leverage. Reasonable meaning that you think that you're going to survive the downdrafts and hit your target within a minute or two, get funded. Right now, there are very few prop firms that allow you to do that. Apex is one of them, which is why we obviously love Apex. They're the OGs. The tape just turned bearish. So the reason why news events are so fertile is because you have what's called like kind of a monotonic move, basically a move without retrace. Remember, what is the danger of going all in on a prop account? It's not that it's eventually going to reach the target. It's the dynamic drawdown. Anytime you slip, the stop moves up. So you have less and less room to operate. When you have a vertical move like this, you don't need to worry about it. There's no trailing stop. The whole thing gets done in one or two candles. Just like it did it here, obviously on Nasdaq, and gold was like 5 times to move this. We needed 1/5 the move in gold to have gotten done, and gold, we needed $7.50. I think gold went up like $45 in 1 minute. So that's the point. The point is that's why we like news events. And one of the things about the reason why I don't like to trade earnings, even though I'll hang for the earnings with you, we can watch the markets. The reason I don't like to trade earnings is because, first of all, news events are precisely distributed. We know exactly 8:30, 2 o'clock on the dot. Occasionally, the Fed is maybe behind by 1 minute, but it's universally distributed. Reports can be between 4 o'clock and 4:10. Companies are not encumbered to release their numbers at a specific time. So between 4 and 4:10, you could have lots of intra volatility that could destroy your drawdowns, which is why when last time we traded this, we were maybe right on the direction, but got stopped out because we got the drawdown. So it's not an effective strategy on news earnings, but post news earnings, sometimes you're going to get some nice big moves that you could trade on a scalp basis. So that's sort of like the understanding. Now tomorrow we have the first glance at GDP, right? That's probably the only event. By the way, just letting you guys know, I'm not trading this right now. I'm really not going to trade for the rest of the session. I'm just going to narrate some ideas so you guys can see it. Tape is bearish. We have a negative signal, and it would have totally worked. You would have sold this, boom, 5-point scalp, actually going further, right? Now you're starting to see the full momentum unwind. Now we're starting to see VWAP. And all of this is very much in sync with what I was saying. Tape is bearish. 8 SMA is bearish. The momentum signal is bearish. All of that is super, super conducive to a high probability trade. So taking this short would have been super easy. It's just that, I'm yapping. And remember, when you're scalping, you got to be in the zone. You have 1 second to execute the trade on the close of the candle. And if you're not in the zone hitting that target, you've slipped. And once you slipped, you've lost your opportunity. So that's the drawdown. The drawback of the scalping strategy is if you're not in it to win it, you're not zoned in, locked in, you really can't trade it. The flip side of it is you can lock yourself in for an hour any time of the day. There's always going to be a scalp on an hourly basis. In fact, there's probably always going to be 5 or 6 scalps, and you don't have to wait just for the New York session. In fact, most of the money we made, really the easiest money to make is Asia and London when you have lower volatility and pretty clean, clear structures. So that's the positives and the negatives of scalping around, which is what we do. Oh, yeah, this reminds me. Let's do another, right. So now is a good time to do another giveaway, right? Let's do another giveaway, guys. Everybody, I have 2 more accounts to give away. We just gave away 1. Laura gets 1. So let me put the giveaway here. Go ahead, guys. I'll give it like another 2 more minutes for everybody to register for the free giveaway, and then we will run another session. Wait, where am I? Where's my giveaway? Okay, it's BK Trader Tools draw. All right, and I think what should we do? Let's do a horse race this time. We're gonna do a horse race this time for our friends at Apex. So a couple more minutes. Go ahead, guys. Put in your names. There's a lot of horses over here. A lot of horses. Everybody registered? Okay. All right. So we had Laura. Remember, you got to be in the room and identify yourself. Unless I genuinely know you and you're like an old BK member, I'm not going to give you the benefit of doubt. You got, if you're new, you got to identify yourself to let me know that you're going to collect the free course. All right. So let's wait till 3:25. 1 more minute. I'll give everybody a chance to register a little bit more. But yeah, it's really interesting, right? I mean, it's super interesting to see how the technical infrastructure that we built overlays the fundamental flow that we're watching in the market. And like he was talking about also the reaction function, how our indicators react to what the market is doing on a fundamental basis, and we can read that reaction pretty well. All right, 10 more seconds. I'll let everybody keep registering. Let me see if I can refresh. Let me see if we can refresh the entries. Okay, nobody has gotten in. Okay, so I'm refreshing. All right, good enough. Let's do the horse race. Horse race. Start race. All right, start race. Adams, Untouchable, Emperor Dabi. Adams. Ooh, Adams is running. Who's winning? Who's winning? Who's winning? Who's winning? Emperor Dabi. Emperor Dabi. Are you in the room, my friend? Emperor Dabi wins the race. I'm going to give you 2 minutes to come say hi to me. If you are there, just say hi. You get a chance to just email us, and you've won. For the rest of you guys, QR the code if you want the discounts at Prop Trader Edge. They're super easy. Emperor Dobby is taken out. There we go. Emperor Dobby. Very nice. You made it under the gun. Okay, the next thing we're going to run is going to be after the market closes, after the market reports numbers. Let's just hang out. Let's just watch, see what's going on. Wow, we're really, holy shit. We are just, they're dumping after. Look at this, guys. Woo. We are negative bid. Market is just right back. Tokyo lows. Market did not react well to this. Interesting. So after all of this positive, they sold the presser. I wonder, okay, it's interesting. Why are they selling the presser? Really interesting. Right back to Tokyo. Holy shit. Look at this moves. I wonder what, let's see what everybody's saying. Why did they sell the presser? Ooh. So yields, that's what it is. The yields are rising, 5.9. So did Trump just make another statement? Is that what happened? Did Trump just shit all over Kevin? Yeah. So this is, it really was a reaction to Trump. So Warsh was very positive. And then of course Trump, like, we're gonna fuck them up, and that shat all over the Warsh thing. So basically, again, the Iran story unwound all of this carefully crafted monetary policy, and that's what makes the market so much fun, right? That's what makes the market so much fun. The great thing is, because we're trading them technically, we traded the upside, and we clearly could have traded the downside. The downside signals were right there for us. They still are there. They're still showing us bearish tape and bearish possibilities. Really interesting. Really interesting. So it was just Trump basically crapping all over the story, and that's the and also the 10-year going up another 10 basis points, kind of fearful that there will be a greater need to tighten monetary policy. Sort of the market is tightening for the Fed itself. While the Fed is staying stationary, the market is maybe over-tightening, but whatever it's doing, it's tightening hard. Remember, markets always overreact, right? Markets always overreact. So the market's mindset now is inflationary pressures are here. Trump is increasing tensions in Iran, which is obviously causing pressure on oil. And we don't see a quick resolution to any of this. So gas goes to 450, 475 over the next 2 weeks. That's cause for 30-year to go to 510. And that's what's kind of unwinding, creating the whole big unwind. That's the fundamental background behind the technical decline, which we can trade. That's kind of what's happening. It's really interesting, right? Kind of cool. Okay, half an hour late. Now let's see if the whole narrative gets reversed. If Microsoft is, we're going to print $1 billion a day story. I doubt it. I think what could happen is they're going to pour salt on a wound. In other words, they're going to show good numbers, but not great numbers going forward, because everybody's capex is kind of at peak capacity at this point. And if the order books show any kind of wobbly or even just not super strong move, this will take us to 27.5 and may take us again to 2,700, which would be the 10% proper decline from 30,000, which is, I think, we're probably going to go over the near term. We'll see. There's like a million different inputs from here to there. But if I was playing macro analyst, which I used to do, that's how I would be thinking about it. Dabi, Emperor Davi, make sure you email us, okay? Make sure you email us so that I have you. So, reviewing, what do we have? We have another account funded on Wealth Charts, right? Which is really sweet. That's going to put us 4 on Wealth Charts, 6 on Trade of 8. We'll trade them all in concert. An interesting change of tack that I'm doing, and I haven't really fully committed to this just yet, but I'm definitely, today was the first day when I was doing it, and it's encouraging for me to see that the thesis is working itself out. And again, this has to do with prop trading and the really in the weeds aspect of how you run the accounts, right? So we have a little time here. Let me share some things with you guys. So you guys know that my number one mantra is small size, small size, small size, because big size is what kills everything. Big size is always the only reason why everybody blows up their accounts, right? So I don't deviate from that point of view at all. However, there's a spectrum between trading too small and too big. If you're trading too small, first of all, the path to funding becomes like months on end. And the longer you go, the more the probability is the market could change, that your strategy could falter. The 75 to 80% accuracy could go down to 68%. Lots of different things could happen. Like everybody knows that the longer you're in the market, the more vulnerable you are to strategy change, and the harder it is to get to target. So you have to find like a sweet middle ground. Now, a sweet middle ground for me was around half a lot, like 5 micros on a trade. So basically, let's say I'm making a trade, $50 bets, $100, $110 risk. I'm running 77% accuracy. That's a good, clean build. I'm going to do 20, 30 trades a day. That really pulls the account forward and gives me a reasonable chance that the account gets funded within 30 days, right? Let's just these are all estimates. Don't hold me to the numbers. But here's the problem that frustrated me to no end. I don't know if you guys have seen that. Trade of 8 does not. First of all, liquidity in NQ is not great in Asia and Europe. Like selling 5 micros at a limit price isn't going to get you into a trade, right? A lot of times they'll just sell 1 or 2, leave you stranded with 2 or 3 on the offer, right? What's even worse is you could get into a trade. Let's say you're offering at 27,765 on 5. You get done on 2 at 65. It comes down to 60. You buy the 60. You cover the 60. You made the 5 profit. But you got 3 of them are not automatically canceled. They're floating. So you have these floating trades over there. You think you're done. You're not done. Price then rallies, and it's a completely different price structure. It rallies. It takes you into a trade. You don't want to be in a trade, and you get stopped out, which is kind of like what happened to me a couple of times. And I was like, fuck this. This is not really an attractive way of doing it. Basically, the bottom line is anytime you do more than 5 micros on a ladder in Europe or in Asia on a limit offer, you're gonna get clipped. If you're not always, but 1 out of 10 times, 1 out of 12 times, that's 1 too many. So I realized that basically, and then the other thing is, of course, commission on the small accounts is 2 times on a per unit basis, 2 times as large as it is on the large accounts. And commission is a huge cost factor. It's the single biggest cost factor of scalping, right? So your biggest cost factor just simply grows like an obese guy, and there isn't much you can do about it. So what I started thinking about is first of all, you know what? I can achieve better commission. I can literally reduce my commission cost by 40%. and I don't have liquidity problems because I can just trade one large contract. Okay, it's larger size, but if I still contain myself to like a 5, 10 rate, basically 100 200 structure, that's on a especially on a legacy account. In a legacy account, I have a $2,500 drawdown, so it gives me like 10 negative trades in a row, which I'm just never gonna, unless I'm really doing badly. The worst that happens to me is 2 negative trades in a row, and because I'm rotating accounts, I'm generally not even going to hit those 2 negative trades in a row. But that's exactly what happened today. Like, I think I lost twice in a row. I was down $400 or $500. I brought it all back. That's sort of like the worst scenario. So it's well within the risk parameters of where I want to be. The point being is that, like, I'm trading now. I changed from trading micros to trading the large account at just one size for both commission and liquidity purposes. We'll see how it goes, but so far so good. So that's sort of like my thought pattern of how I adjusted my trading while we're responding to to the dynamics of the market. So we'll see. I do like it. NQ is obviously super liquid, a little bit more liquid than MNQ in some ways, there I don't have any problems. Obviously, if you know one contract, you're not going to get any problems getting executed. The only other thing, and this is the last thing the insight from all of the scalping that I did, can't get cute. Cannot get cute. I used to love do join, ask, join bid. I used to love to buy at the bid, sell at the ask in order to get the best possible execution on these scalp trades. No. What happens is 1 out of 4 times you're going to miss the trade. And the trade you're going to miss is almost 100% a winner. So you're not doing yourself any favors. It's better to be slipped and win than it is to be not executed and not win. So now I've really reconfigured. I basically said, fuck it. I'm going to just, eat my slippage. That's why you really want to be in the zone. On the very last second of that candle, you want to be in the zone. You want to time it perfectly, hit the target, and try to minimize your slippage as possible. That's your one control. But when you hit that target, your chance of that thing hitting is 80% on a proper structure. And if you are waiting to get queued for it to come down to bid, it's almost never going to come down. Especially in the large contract is much more competitive than small contract. It's much harder to get hit on the bid, hit on the offer, unless you're absolutely wrong. Unless you're absolutely wrong on the trade within that contract. So now I'm just market entry, limit exit. That's the other thing I sort of learned from the final points of the scalping strategy. So kind of wanted to share with you all of these ways that's come to my mind. Any questions? It's we're just basically chilling and grilling here till the end of the session, waiting for Mr. Softy and Meta. Numbers are going to be released after the market to see how it goes. Any thoughts? Any questions? I'm happy to chat with you guys and chill. We have one more giveaway to do. We'll do that a little bit later. By the way, sorry, I'm yapping. You can see all the sell signals are totally working, right? This is a winner. This is a winner. This was a loser. This was actually interesting. This, if I was selling the buys, I would have eaten this. But selling the sells all worked. So that was interesting. Actually, let's see. Let's go back to replay, right? Let's see where we are. So we're over here. So we are. Oh, this is very far. So okay, now we go to mixed tape. Now we negative tape. Now we're negative tape. No, this is mixed tape. Mixed tape. Negative tape. Negative tape over here. I'm selling the sell. That's going to work probably. Yeah, that does that work? Yeah, I mean, it would have worked. It's hard to say. It was a seven entry. If it went all the way down to 98, I'm going to give myself that it would have worked, but it was a very, very close call. Now we're definitely negative tape. Now we're waiting for a signal, negative signal that works for sure. Negative tape, negative signal. Does this work? Probably it's going to work. Yes, that works. Now we have signal. Now we have a buy in a negative tape. So this would be a sell of a buy that does not work. So so this is a winner. This is a winner. This is a winner. 3 winners. This is a loser. If you're fading, if you say fading, but if you're selling the sells, if you're selling the buys, this was a loser. Now we're looking for, this was over here. We're selling the sells. That's another winner. And let's see what else is happening. Selling another sell. That's another winner. And now we actually looks like this is the end of the road, right? This is the end of the road here. We're negative tape, and this is a buy signal. So if you're selling the buy, let's see if this would have worked. Astrologer says New York lows are going to be hit. Probably. I mean, it's right then and there, right? So if you kind of think so, then selling the buy might be the right trade here. Now it actually turns into a sell. So we got 33 seconds left. Let's see how this resolves. So if you followed every single sell condition, you were 4 out of 5 in this particular cycle. The one wriggle was the buy trade. If you took only the sells, you were 100%. 2 seconds left. This is a sell, so this is a legit sell. The close on this would be 10, and we're just looking for 5, and I think it actually hits it. Yeah, it definitely hits it. Now we're down through the 500s. So another super easy scalp, like knife through butter, that would have done for us. So now you've been 6 for 6 on this particular online segment, and now we're hitting New York lows, right? So pretty bearish tape, and the technicals are certainly giving us all the signals we need on the tape. So interesting takeaway here is you really don't need to sell the buys. If you sold the sells, meaning that you don't have to get too aggressive with this thing. If you just sold the sells, you would have been fine. You would have been 6 for 6, and you would have really collected some nice payout. So you would have made money on the up leg while Warsh was talking, and much more money on the down leg after Trump was kind of pissed all over everybody's expectations. Plus the market kind of unwound. So that would have been the play. We got 15 minutes to the close. I'll hang with you guys to close, but I think what we're going to do is, because we have a little bit of dead time and I'm not trading right now, we may want to run our last contest before earnings release. So everybody who wants to come into the room, come hang out with us. Put your name on there. Hang on a second, guys. I got to do something. Wait, let's do this. Bear with me, guys. Sorry, just bear with me, guys. Okay. So New York lows. Astrologer says New York low is going to be hit. We're certainly right then and there. All right. Should we do the giveaway? Everybody ready for the giveaway? Everybody want to rock and roll? By the way, we're back in business 6 o'clock in the morning tomorrow. Very excited to trade post FOMC, and we're going to trade. We got a couple more accounts, so we're going to trade. We're going to trade the GDP numbers, right? I think. Let me see. Do I have a couple of more? Yeah, I think we have a couple of more. Don't forget to buy more Apex. I think I'm going to have to buy more Apex accounts before the whole thing closes tonight. So don't. I think I'm going to need a couple of more because I don't have enough. I have one. 2. No, that one is already funded. 81, 82. Oh, so I have 2 more. That's good. We have 2 more. So we can trade tomorrow. Yeah. Okay. Don't forget, get a couple more accounts to trade. Because I think it's gonna be super easy. What I'm trying to do now is obviously, one and done is the bread and butter of what we do, but I'm also running these 2 other accounts that I showed you guys in Tradeovate just on a pure scalp basis to funding. So like working them the exact same way that I do my funded accounts. And that's super interesting because if you can run that, if you can run your evals in the exact same way as you run funded, then you can absolutely run it to payout with high degree of confidence, which is what I'm trying to do with this particular strategy. Every time you come into YT, I'm trading, dude, man, I in a perfect world, I'd just be trading, playing music, and not talking, right? That's what I love to do. And there's so many good opportunities for us to trade. All right, should we do it? Should we do the giveaway? Everybody ready for the final giveaway? Who wants to? Don't forget that this is the last registration. So give. If you want to register. So Emperor 1, Laura 1, let's do one last giveaway, right? We're going to do draw. Oh, there we go. Refresh. What did we do? We did horse race. Let's do car race. Car race, baby. Car race. Are we ready? Are we ready for the car race? Okay. Shall we do it? Here we go. Here we go. Here we go. Car race. Oops. Start race. Chris, Michelle, Chris. Bye. So Emperor Davi should not be in there. Jake. Oh, okay. Jake wins. Emperor Davi should have been eliminated, but it's fine. He didn't win anyways. Jake wins. Jake was here in the morning. I doubt he's here today. Now, Jake registered in the morning. He is not in the room, and the rule is you got to be in the room. So I am going to give Jake the benefit of the doubt for about 60 seconds. If he doesn't show up, we're going to clear him. We're going to run it again. We're going to run it again. I can't add you. You got to add yourself, my friend. So Jake is done. We're going to eliminate Jake here. We're going to refresh everybody. We're going to run the car race again, guys, because Jake is not here. So we're going to do this again. No. Alan, Striker, very funny, buy well. Neil, Neil. I know Neil was in the room because he was talking to me earlier. Neil, are you there? Neil, talk to us, baby. I know you were there. I hope you didn't fade. Oh no, that was from the morning. Neil, are you there? I know he was there in the afternoon. Maybe he's gone too. If Neil's not there, we do it again. We do it until somebody says yes. Maybe we run this 10 times before the earnings. We'll see. Neil. No, Neil's not responding. Okay. So we're going to take Neil out. And we're going to spin again. Yes, we're going to spin again. You know what? Let's do a spinner. Let's do a wheel spinner. Enough of the car race. Let's do a wheel spin. Let's do the spin. And let's see who's going to win on the spin. And Mario. Now, Mario was registered at the 2 o'clock hour. Mario, are you there? Neil, is that you? Tompkins 777? Says, yes, I'm here. Was that you, Tompkin, as Neil? Or is Mario? Who's Mario here? All right, identify yourself. Tompkin, talk to me, my friend. I can't read your mind. Oh, this is Tommy. So no, you did not win. I was looking for Neil. I'm looking for Mario. Neither one of them are here. We're going to take them out. We're going to take them out. We're going to spin the wheel again. Who's the winner? Chris. Chris. No. Chris is not here because he was here in the morning. Okay. No, I'm going to take him out. I am going to take him out. I didn't clear the cache from this morning, which I probably should have. Oh man, where's my cursor? Here's my cursor. I'm going to take him out. Let's do a horse race. And it's Jay Fennell, also an old buddy of ours, but he was here in the morning. All right, I know Jay Fennell, so I'm going to, I don't want to run this permanently because it looks like a lot of the 9 o'clock people were in the pool, and I should have cleared them. But don't worry, I still come back tomorrow. I still have more accounts to give away. So we're going to give this one to Jay Fennell because I don't want to run this endlessly. So we're going to give this to Jay Fennell just because, he's a friend of the family, and I cheat at these things. Unless you identify yourself, I will distribute this on a privileged basis. So Laura wins, Jay Fennell wins, Emperor Davi wins. That's the distribution for today. We got about 5 minutes for the earnings to come in. So let's see what Meta and Microsoft do. And look at our friend Astrologer. We hit New York lows. Astrologer has been Nostradamus of session lows, session highs. You know what else? I keep forgetting this, and I know I keep saying I'll do this. I will do this maybe next week when I have time. The only thing we're missing contextually from our indicator is prior day high, prior day low. Yesterday's high, yesterday's low. Easy enough to actually create, and I'm going to see if I can update the indicator with that to give us contextual stuff. Peter says he'll take it off my hands. Okay. We still keep getting sell signals, guys. We are just, crushing it. Like I said, we may be 27,000, even, by Asia trade, which would give us, full 10% sell-off in the NASDAQ. So yes, all the sell signals here absolutely got caught. Like we would have just been able to mint money. I'm just, I'm not focusing on scalping because I'm just chatting with you guys. But all the sell signals here would have been in the zone. So it would have been very, very cool. All right, 4 minutes to Mr. Softy News. We'll see how it goes. We'll see how they print. Okay. All right. 2 more minutes. What stops you from burning out? I like what I do. Number one, what's the number one important aspect of doing business, right? You like what you do. You like what you do, then you don't burn out. What do you do, Peter? Astrologer, look at this dump, man. Holy fuck. Just relentless. Man, all these scalp trades. There was literally about $500 worth of scalping over here. Man, well, not 500. Yeah, close. It's about $100 a scalp. So it's like winner 1, 2, 3, 4, 5. Yeah, $500 worth of scalps in the last hour to be taken. You love the lightning bolt. Lightning bolt. I told you guys, I ran all the numbers. The most robust of all this, because think about what lightning bolt is. It's an ATR breakout. It is inherently consistent with the relative move of the market. Because it's an ATR breakout, it's always relative to the volatility of the market. So if you have a volatility breakout within the parameters of the market, the probability of continuity is really, really strong, especially when you do the all overlays. It's earning time now. Yes, it's earning time now. It's 2:59. Or 3:59 in New York. We'll know by the price action. So we'll see. Mr. Softy and Meta reporting probably around 4:05. So it may be a couple of minutes before they release the data. We'll see what the reaction is on the market. I am a trading degenerate. That's exactly right, baby. But yes, who was saying it? A40. The lightning bolt breakout is the best of all the scalp strategies that we have. If you guys focus on one, that's what you do. And by the way, Jazz is not here because he's obviously on Australian time, and he comes in London. Like the Jazz trade, like we're talking about the idea. Like for example, if we go positive against this Jazz low, just for argument's sake, it may not happen, but if we go positive, that is a great turn trade, right? If the tape goes positive, if we go green, green tape, this Jazz low would be the right structure to trade against. All right. We got 4 o'clock. Let's see what they're gonna do. I'm gonna let's see if we got the news applet. Qualcomm earnings. In line, nothing of interest. 9 million capex. That's between 9. Okay. So Qualcomm has nothing going on. All right, where's Mr. Softy is about, I guess, a couple of minutes away, right? Let's. I wonder if we can go to the news. There we go. See, I told you, NASDAQ drops 11 from June record correction. We're in correction territory. Mama Meta? What does that mean, Mama Meta? What does that mean? Meta hasn't released yet. We're all waiting for Meta. Ooh, we really dumped. Meta M2 guidance. What? So where's the numbers? The Meta release? I don't see the Meta release yet. Oh, here's Mr. Softy. Here's Meta. Mr. Softy beats Meta. Ooh, Meta really misses. Holy shit, Meta really misses hard. So that's why we dumped. That is why we dumped. Meta really dumped. Family of apps revenue 60. Operating income was 18 negative on the year. Yeah, so Reality Labs revenue, cloud revenue. So Mr. Softy continues to operate pretty well. Really beat hard, but Meta really dumped. Raises CapEx 130, 140, prior 125, raised the lower end of its expense outlook. Yeah, this is negative. Meta really blew the gasket here. Wow, ATR at 51, guys. Whoa, look at this. Look at this massive negative flow. So we are significantly bearish on the tape, significantly bearish on the news. Should be an interesting Asia Open for people who want to trade. That's going to be pretty wild. We're not trading Asia today because we traded this. We did pretty well, like I said. More importantly, I think the tools that we're building here are just proving themselves to be more robust by the day. Look at this vol. Holy shit. I think we're going to 27. We're going. I don't know. The only question is, do we go now or do we wait till Asia? But we're definitely going to go 27. Wow, that is a big ass miss. We missed the dollar. That's negative. Now watch everybody come out like, oh, it's the end of the world. NASDAQ is going to be a corrective, environment. Blah 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 blah. I think it's probably going to be. We're 2/3 of the way to a near-term bottom on this trade right now. We're probably going to bottom out around 26.5 or so, maybe 25, and then we'll start to re-rally again, especially if things stabilize. But should be interesting. From our perspective, it's what happens in the next minute, and the next minute is sending us really good signals for the most part, right? All right, guys, thank you. That was a lot of fun. We did all the right things. I will see everybody. Tomorrow for the 6 o'clock show. Everybody enjoy. Have a great night. I'll see you guys later. Bye-bye.